So here is a strategy, one of my favorites, a short squeeze. It happened today, February 13, 2024, on NQ. And okay, let me start here. So today was CPI news. So inflation data came out at 8:30. So this is what caused this huge drop. So bears were very aggressive, moving the price down quite significantly. It was 50, 100, that's 50, almost 200 points. Yeah, 200 points from 8:30 all the way to 9:30 or so. So when this happens, is one of the things that I'm always looking out for is a short squeeze. So a short squeeze happens when bulls start to make a comeback and they force shorts to start covering, and that creates buying pressure and starts to make the price go up. So this is actually a trade that I took. So this is my thought process and the strategy that I implemented. So price came down here. As you can see here, bulls try to stop the bleeding and start to push the price up, but they were unsuccessful here, and it just continued to downtrend here. So as you can see from here, continue to go downwards in this little channel here. And then the regular trading sessions opened, and we saw here that it bounced off this here, this little hammer candlestick bounce here, and as you can see here, it corresponds to this demand zone right on the dot. It bounced off at demand zone, so that's a good sign. It bounced and it pushed price up. Now, I personally do not like to trade the first 15 or 30 minutes of the market open. Specifically, the first 15 minutes, I like to wait until let the market decide what it's going to do. And what I ended up seeing here is, okay, I actually took this trade 3 times and I got stopped out twice. And then a third time for this setup, it finally worked. So what I was looking at here is price started to come back up. The 90 MA is one of the indicators that I like to use. Once it's above it, that's bullish. Below it is bearish. So it was this candlestick that gave me, okay, we're finally going to potentially break out to the upside and start squeezing some bears. And I entered the price around here, but I got stopped out like within 5 minutes here because I was keeping my stop very tight because there was a lot of volatility, and I ended up trading micros here. So that was one thing. Now, in hindsight, one of the things that I could have done better was looking at the ES a little bit more closely and seeing that, okay, ES was going downwards and then the NQ was going upwards. So they were not in alignment. So in hindsight, I should have seen that. Another thing that I could have done is obviously a wider stop loss and a higher profit target, but I didn't. So I got stopped out once and then again twice. This candle was looking very bullish, but I should have waited until the candlestick closed, and I would have seen that it was not the right time to go long just yet, because I did get stopped out here. Now here it was looking very, very bearish. So as you can see, these 2 candlesticks, or this one and then this one, we were just creating some resistance in this area right here, hard resistance here. So we were not going above this area. And then here we bounced off this level that I had marked here. We bounced off very nicely, as you can see here in the 1 hour. And then here, obviously, we had some probably had some shorts that went short, some bears that went short in this little, I guess you call it a bear flag. So it was a false breakout for the bears, and then we bounced off perfectly here on this line, 630. So once I saw this candlestick that we moved, you know, it was 30, almost 40 points in 5 minutes. And in real time, this candlestick, it moved within 2 minutes upwards. It was in 3 minutes, it was down here, and then in the next 2 minutes, it was all the way up here. So I saw that we could potentially squeeze bears here if we would have broken out here. So I got in right around here. Right around here, I got in with 2 micros. And then as it was going my way, I started to go and scale in some more, so add more contracts, and I went up to 5. And as I was doing that, I was reducing my stop loss. And I think my average was around here. I have to check, but it was around here. And my target, my goal was to keep the stop loss very tight because we were also above the 90 EMA. So if it was to break below, then that would have, you know, I wouldn't have gotten in or added more contracts. So my goal was to get in on the 50% Fibonacci retracement because that's typically when price starts to come back. Okay, so once we broke out here, this 38%, so we had 2 consecutive very bullish candles. I knew that we would potentially, you know, continue to squeeze bears. In real time, the point of control did stay in this area, around this area. So that was another level of confirmation for me. I also knew that we had this huge gap here that I didn't think we would fill it all today, but I did think that we would fill at least some of it. So that was another thing. Another thing is that we did bounce off this demand zone, like I mentioned earlier. And then ES was also in confluence with ES. So I had gotten above the 9 EMA, and it was looking very bullish here. And here it had also broken out of VWAP. So that was also a good sign. And as I was in the trade, I was also looking at some of some lagging indicators that I sometimes use. Use the MACD. So the MACD here was showing some positive momentum towards the upside. So that's how I use the MACD. I don't use it the way some others use it, where if the lines cross and you go long and all that, which in this case it would have worked, but that's not how I use it. I just like to look at the momentum, how it's reading. And I also use the TTM momentum squeeze indicator. So again, I was also seeing some convergence here to the upside. So again, I don't listen to or look at these dots or whatever. That's not how I use these indicators because I really don't. I mean, sometimes they work, sometimes they don't. But yeah, so this was the momentum squeeze trade setup. Now I was in with 5 micro contracts. So I took 4 off here once they hit the 50% retracement. And then I left the runner, and the runner ended up going. I have to check exactly where I went all the way towards that runner, but I was micromanaging that that contract and making sure that, you know, I was moving my stop loss all the way up. So this trade ended up getting me about $520 or so. So it was a very good trade. And this is something that I really like to look at whenever, you know, there's a huge drop or a huge pop. I like to look at. In this case, I have some confidence, some bias that we will continue going upwards because Overall, the trend for the past month or several weeks has been upwards. The dips kept getting bought. So that was another thing that, I was expecting the dip to be bought, which it did early in the morning. And this trade, I typically see it whenever there's, huge news, or especially CPI news. So that was something from experience that made me be bullish. Yeah, so after the trade, I was, in hindsight, I obviously should have let the trade go longer, um, and not take significant profits off the table that soon. But again, it's the trade-off that you always have to manage. But yeah, it looks like today it was working right off the 9 EMA. It was rejecting the 9 EMA the entire day here, the entire day, well, until the end of the day. And it did so again with ES as well. But overall, I think this is a very good trade. In hindsight, I could have gotten more, but I'm very happy. And this was one of my favorite short squeezes. Again, just to recap what a short squeeze, how I like to identify short squeezes is when there's significant drop, and then there's like a base that starts to form. And I mean, you could have also seen this right here. I'm just seeing this right now. Whatever this pattern is called. And you would have seen that, yeah, after we got beyond, even if you waited for more confirmation, if you would have gone above the 38% Fibonacci retracement level, which obviously would have been a better confirmation or an additional confirmation, because this was an area that was rejecting, so let me draw this out. It was rejecting, it dropped some more, and then it rejected, and then we finally broke out. So if you would have waited until we broke out here and kept your stop loss below the 9 EMA with a 2R, that would have been a very nice trade right there still. So yes, like I mentioned, I did get stopped out twice here, but I was in very small size. I typically like to start out with small size for my first couple of trades and build a cushion. And then I like to, if the trade is going my way, I like to add to my position. So this is exactly what I did here. I started out around here, added, and my average was around, I think around here. And yeah, that was a short squeeze.